It seems like the Bitcoin's drop slowed down. We tried to test 4,900 on Coinbase, but then price very soon returned to the previous channel, and now we're trading like above $5,000. It seems to me that huge players in the market tried just to find where the liquidity is right now. They tried to push price above the resistance level and they didn't find much of the volume there. They tried to push the price lower and tried to find the volume there. No volume there as well. And if you'll even compare what we see here in terms of the volume with what we saw over there, and even like this area and this area, this is really like a small volume comparing to what you would expect for the short orders opening on the way down, and also the liquidation of the long orders, which would be probably placed somewhere below the support lines of those channels. But we didn't see that. It probably means that since the volume wasn't there and there, the price will go sideways, and then eventually the same attempts will be made from the whales to find the volume and the liquidity in the market. The thing which I forgot to mention yesterday, guys, is the trend of the Korean exchange. And you see, if you will compare Bitcoin price on Korean exchanges to Bitcoin price where it is traded with respect to the dollar, then you would see that recently, from the end of February, this ratio is going up. So this is well-known thing as kimchi premium, when the price on Korean exchanges is much higher comparing to the USD exchanges. You'll see, for example, here in the very peak of the bull run, we had it much higher, like 50-60% higher than now. So it seems like this small rise may be treated as the positive signal for the fact that Koreans are feeling that the price of Bitcoin will go higher and they trying to step in earlier. Another interesting thing is tether. If you look at the price of tether to USD dollar on Kraken exchange, you will see that when the price of Bitcoin increased over here, made this jump to $5,000 and higher, we saw the price of tether rose above $1 mark. And apparently because people just try to sell their fiat to tether and then use tether to buy Bitcoin on like faster basis. And then what happened later, here we saw some volume around this for this trading, and then the price of tether started to go downward. It didn't go lower than $1. And also in this area there was not so much of the volume, but after that the volume became actually higher, and it's not 100% clear why. The point is, it could be the withdrawal of the fiat via tether, or it could be an additional loading of fiat via tether. I don't think the former is reasonable, because otherwise that will happen at this area, especially when the price of Bitcoin was higher and the volume of the Bitcoin trading was actually higher in this range as well. Now we see the lower volume on Bitcoin to USD, but on the other hand the higher volume on USDT to USD, which would sort of make sense for the scenario when at this area huge players are accumulating higher position. And actually somewhere around here, as you remember, we had the price drop, so it would be more reasonable to expect that the price will be dumped in order to let them buy a little bit cheaper than this area, because we saw quite of the positive dynamics, and of course they didn't want to buy too high, so they probably just tried to dump the price and hold it within the certain channel in order to be able to add some more positions. Of course, just a speculation, my personal opinion, not financial advice to buy or sell, guys, but interesting to observe that thing. And also, since we have almost a higher high, it seems like we're about to return, and the altcoins are doing not that bad already, so we see some green in the altcoin space, so everything indicates that the price should stop falling from now on. But I just want to show you the daily chart, and if you look at it, you will see how small this red candle actually was comparing to the previous rise. Technically this could like drop 50 or maybe 40-30%, but instead of that it was quite of a small correction, assuming that it was over. But even at this small correction, people already started to say, okay, we're going to 3,000, we're going to the new low, $2,000, Bitcoin will go to zero. I'm just surprised that we still tend to believe in such things, especially after such a long period of the drop of Bitcoin, and like seeing so many confirmations of the bottoming, or at least relative bottoming, in December last year. And what I would like to show you is another indicator which is showing this thing. This indicator is made by Alexander Elder. And the cool thing about this force index or Elder force index is that it is using not only the price but also the volume. So it is calculated by the multiplication of the volume and delta between the close of the price in current period and close of the price in previous period. And also it has an exponential smoothing on a certain period, like 13 periods or whatever you would like to set. And you can see some signals of that even on the daily time frame. But if you look at the weekly time frame, that you will see that during the whole bear market, this index was below zero. Very little it rose above zero level on a very short period of time, and then eventually we dropped again lower, and then recently it turned to be positive and much higher even than this one. If you'll compare it, for example, with 15th year, this was very similar. So we had almost all the time very negative values of this index, and then over here it was the first huge increase of this index values, and that was at the point when price actually escaped from this accumulation period. And then after this strong rise, yeah, it was quite of a deep correction, but then we didn't see the price returning to this level anymore. From that point, basically the price was continuing to go higher and higher and higher. And you see, we had many such corrections over the whole bear market. We see like 30–40% of the correction. It looks small, but for example here it was 1,300 something and the low was 900, so it's more than 30%. Here it was 3,000 and the low was at 1,800, like 40%. And it's actually on the bull market, and we are now somewhere around this area where the bullish sentiment is still strong, when we still see some panic sellers in the market, and it will be no wonder then the price will go like $4,500, $4,000 or even lower. It wouldn't mean that we will go to the new low. It would just mean that we have a very severe, strong correction, but it's more a buying opportunity in my opinion. Of course, as usual, not financial advice, guys. I keep repeating that, but that seems to me pretty much rational. And another thing, for example, which I can show you, which was discussed and retweeted many times recently on Twitter, is the Guppy indicator, which basically is the set of the exponential moving averages with the short and long periods. And when the long period moving average set is above the short moving average set, then the area is red, and those colors of those moving average is red. And when it's opposite, then the color is green. Some intermediate area is grayish color. So you can see that during the whole period of the bear market we didn't see green area of the Guppy indicator, and recently finally we saw it turn to be green. So basically, if you'll check any indicator, any meaningful value about the market which gives you more or less meaningful information, all of them are showing that we either were bottomed and we're like accumulating, or maybe even going out of the accumulation phase, or that it's just very high probability of this happened. So in my opinion, it's more reasonable to search for those bounces like 30–40% and try to buy more on those bounces, maybe cover a little bit when the price will go higher after that, but still find opportunities in those corrections instead of allow your emotions to rule your trades, to panic sell or something like that. Okay, I hope it was useful. See you tomorrow in the next update. Thank you for watching.